Traders remain cautious amid growing uncertainty over the future actions of central banks. While the Fed Reserve is hinting that it will raise the key interest rate only by July, the plans of the Bank of England remain vague. Meanwhile, today the UK has published the bulk of important macroeconomic reports. Thus, the UK unemployment rate remained unchanged, being in line with the forecast. Importantly, the number of unemployed claims dropped by 32,000 instead of falling by 27,000. However, such positive figures were neutralized by the employment report, which unveiled a decrease of 38,000. Economists had foreseen a jump of 75,000. The situation was somehow improved by the average earnings data. The growth pace accelerated to 4.3% from 4.2%, whereas analysts had predicted a slowdown to 3.9%. In other words, data on the UK labour market turned out to be mixed. However, in general, it's quite positive since most indicators became better. Nevertheless, it was not enough to cause a confident rise in the pound sterling. The British currency began gaining in value, but very slowly. The fact is that the reports point to a possible rise in the unemployment rate. In the Eurozone, the second GDP estimate failed to affect the market situation since it fully met the initial one. Thus, the Eurozone economic growth accelerated to 4.6% from 3.9%. Investors learned this information long ago. Today, the US is planning to disclose its producer price index figures that will hardly alter trader sentiment. The indicator may rise to 10% from 9.7%. However, the data is likely to be overshadowed by the results of the Fed's emergency meeting. The regulator made it perfectly clear that the issue of the benchmark rate hike was settled. It means that the rise in producer price will hardly affect the situation. In addition, the expected growth is one more argument in favor of higher interest rates. Let us take a close look at the trading charts. In the last 3 days, the euro has lost more than 200 pips against the US dollar. It's a strong price change that led to a 50% jump in the US dollar positions after the recent correction. Since the price almost reached the local oversold level, it stagnated and then rebounded. This may result in a change in the market sentiment. If the price fixes below 1.1260 on the 4-hour chart, the volume of short positions may increase. Meanwhile, the pound-dollar pair failed to leave the long-lasting sideways channel of 1.35 and 1.36. It's still hovering between its borders. This situation reflects hesitation among traders. Notably, unlike the pound sterling, the euro-dollar pair showed a decline, ignoring correlation between the trading instruments. Against this backdrop, the sideways movement points to the accumulation process. That's why it's better to apply a breakout strategy. Signal levels are located at 1.3630 for buy orders and at 1.3480 if bears regain control over the market. And you are watching Forex Market News on InstaForex TV channel. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you in our next release.